Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Steven Ehrlich, Director of Research Digital Assets at Forbes Crypto, to discuss what crypto investors should look for at the next Fed meeting and why NFTs have largely bucked the trend. Steven, it's great to see you. I know it's been a busy couple of months for you. Let's talk about how crypto prices are being driven by what's happening in the macro environment.
Yeah, Jill, and first of all, thanks for having me back. Happy New Year to you, although I guess a bit belated. It's always been a bit of a fallacy that crypto and Bitcoin is uncorrelated with the general marketplace. I mean, perhaps that may have been true a couple of years ago when Bitcoin was really this microeconomy where most of the holdings were in like sort of crypto natives that had a real ideological affinity to the asset. But as it matured and as it expanded into more common retail traders and institutions, any money that gets allocated into Bitcoin, into crypto, has to come from somewhere. So by that very definition, there needs to be some degree of correlation. And then especially as asset prices have grown, there's many people that have found that perhaps even if they were targeting a 1 to 5% allocation in their portfolio to crypto, it actually turned out to be much more the 10, 20, 30, 40%, depending on how the assets went. So it's clearly correlated. And during periods of market uncertainty and crises, the correlations of almost every asset go to 1. We saw this in March 2020 in the middle, when that Black Thursday, when everything crashed. And then we're seeing it again now with fears of Omicron, inflation, the general status of the economy, supply chain shortages, and then perhaps most importantly now, concerns about Fed tightening and raising up the interest rates for the first time since 2018, which directly threatens Bitcoin's narrative as a sort of an inflation hedge, a form of digital gold.
Right. So the obvious question is then, Steven, what should we be looking for at the Fed meeting that takes place in January?
Yeah, so tomorrow the Fed's Open Market Committee is going to be meeting. It's one of their 8 two-day meetings throughout the year, and a lot of analysts expect them to sort of issue guidance on when they're going to start increasing rates, likely this year. They haven't done it since 2018, and my expectation is that we're going to see the first one in March, which is when the Fed's going to finish winding down its asset purchasing program, which was well over $100 billion on a monthly basis this year. I mean, when that happens, we'll have to see how the market reacts. It's certainly going to be volatile. The idea of an efficient market would suggest that those prices have already been built into the market, but we know things are never as clean as they would appear to be on paper. So it should be a choppy couple of days.
Right. So let me ask you this. Which assets are best positioned to recover faster? Because one of my thoughts is, okay, we've seen a lot of money being shaken out of Bitcoin and larger crypto asset class in general. Perhaps that might not necessarily be a bad thing. We know there's been a lot of institutional adoption. We know that they're not necessarily going to go anywhere with the amount of money that they invested. So perhaps this is a more appropriate level, and we'll continue to see it sort of have that gradual move higher now that a lot of outliers have been shaken out and you still have that institutional involvement. What are your thoughts on that?
Yes, so I think that's an interesting point, and in some ways, sometimes a crash, for lack of a better term, can be cleansing. It can be healthy for a market to get back to a place that's a bit more sustainable. I don't think anybody in crypto, even the biggest bulls, would be opposed to a bit less volatility. Right now, I mean, Bitcoin actually has done better than most of the other assets, even though they're all down 10, 20, 30, 40% on the month. And it's done much better than Ethereum, for instance, although despite the fact that Ethereum outpaced Bitcoin about 4-to-1 last year. And a couple of reasons. One, Bitcoin's seen as a bit of a safer asset. It has more liquidity than some of the other assets as well. Stable coins, people run to the safety of a stable coin during these times of uncertainty. But as we sort of try to climb out of this, and as we're recording this, then Bitcoin is at about 37,000. It was down around 32,000 about 24 hours ago. I'll expect some of the larger cap coins to do well. Bitcoin will continue to hopefully slowly climb up. Ethereum, I do expect to catch up, and one of my big predictions for this year is that Ethereum is going to pass Bitcoin in terms of total market capitalization. And I would expect some of the other layer 1 tokens that are what's known as EVM compatible or Ethereum compatible, meaning that transactions can be ported and tokens can be ported between the different blockchains. Will do well as well. We will see other assets. Solana is a big one that I'm a fan of too. We'll see other alternative coins pop up here and now due to certain esoteric reasons. But at this point, with as tenuous as the market is, I would focus on larger cap coins that are a bit more liquid.
And why have NFTs bucked the trend?
So, I mean, NFTs, it's kind of like the little engine that just keeps on going. I mean, in January last year, when NFTs first went white hot, people said, oh, well, this is a fad. This is a fad. Then it climbed down in the spring when the rest of the market fell following some bad news out of China and Elon Musk raising some concerns about Bitcoin's carbon footprint. In August, it surged, and then it just continued growing. OpenSea, the world's largest NFT marketplace, just closed around the funding with at $13.3 billion, and that's just the tip of the iceberg. So far in January, NFT marketplaces have done over $5 billion worth of volume, which is by far a record. And I think we're just scratching the surface on NFTs and what they're going to mean. That said, I do think for long-term success, we're going to have to move beyond NFTs being seen as sort of like a prestige asset. I mean, Twitter just announced the functionality where NFT holders can sort of use their NFT as a profile picture, and they need to be cheaper to access, they need to be cheaper to use, and we need a bit more functionality. So that'll be like the next step up. But I do think that NFTs have really caught the imagination of a lot of people, which is why they've continued to surge while the rest of the market has been going down.
And what's so interesting, Stephen, is, we saw it take just a little over a decade for institutional involvement and for financial media to kind of catch on what's happening in the digital asset space. But with NFTs, it appeared to be almost overnight. Virtually every brand is getting involved with an NFT in some capacity to attract and retain the younger generations that understand what this is all about. I read something, it was either in December or early January, Morgan Stanley put out that the European NFT luxury market could get to nearly 50 billion euro by 2030. I mean, that's just incredible traction.
Yeah, it really is. And I want to correct you perhaps on one small thing. I mean, NFTs did not just happen. I mean, OpenSea has been in business for years. And my colleague, Jeff Coughlin, who did a deep profile on Devin Finzer and names escaping me, but the other co-founder of OpenSea, I mean, they had calls in their parents' basements like a year and a half ago, 2 years ago, about when they were going to wind down the company. I mean, it was that level of danger for the firm because people just weren't interested in it. They were more curious about fungible tokens, ICOs, right, and DApp coins, and then just something caught fire, and every perhaps because of how crypto has gone mainstream already, so these brands really kind of got into NFTs and saw how much money is available to them, and ways that they can engage with their customer bases, so on and so forth. I mean, I think the YouTube CEO today just put out in her annual letter said that they're going to look for a way for YouTube to integrate NFTs. So you're absolutely right on that point, though. I mean, once right, NFTs really got traction, then all the big brands, they saw that legitimacy, and they saw a really new, exciting way to engage with their client bases.
Right. And Stephen, I appreciate that correction. I probably should have more correctly put that. I feel since it's, last winter, early spring of 2021, it really seemed to have gotten that traction, at least in the financial media space. But yes, to your point, it isn't necessarily something that brand new just came out in 2021. So to wrap up here, anything else in 2022 you're keeping your eye on?
Yeah, so again, one of my big predictions is just that Ethereum is going to pass Bitcoin by market cap. I mean, if you look at the two assets over the course of the last few years, they really kind of went toe to toe. But last year, because of DeFi and then NFTs, which are largely run on top of Ethereum, although that is changing a bit now, Ethereum basically 4x Bitcoin's returns. And absent this sort of market turmoil right now, I expect that trend to continue moving forward. Another one is just that I think it's time for there to be a spot Bitcoin ETF. Not that I'm necessarily advocating for one, but just generally the way that the industry is developing, the way regulators and governments are starting to get comfortable with the technology and try to find ways to standardize regulations and add transparency. I do think it's just a matter of time before we're going to see a spot Bitcoin ETF application approved. And then the other big one is, I mean, just looking at the role of politics in sort of how regulators like the SEC are going to approach the space. I mean, a lot of people think that this is the first year where crypto is actually going to be an election issue. And Gary Gensler has really kind of come out, the SEC chairman, and said that he wants to regulate the space more firmly. And he's made it clear on several occasions in testimony, written and otherwise, that he sees many tokens out there as securities, even if exchanges like Coinbase and Kraken and FTX and Gemini, et cetera, don't agree, which is why they list them. And I do expect him to start saying that more tokens, more popular tokens are securities, which will force exchanges to either have to register with the SEC or delist them, which could add to some further turmoil as the year goes on.
All right, Stephen, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great. Thanks, Jill.
All right, awesome. You know what, Stephen, we actually